And so a lot of, business owners, when they have cash, they're thinking about expansion, they're thinking about this, and they want to grow. And
welcome to the Live Greater View, a financial planning podcast produced by VLP Financial Advisors that discusses life, money, and perspective. We help clients live their best life at every stage through our VLP Live Greater partnership process. Thank you for tuning in. Well, welcome and thank you for joining us today. We got a great topic. Breaking down the finances of being a small business owner with our special guest, Bob LeMay. So
Yes.
Bob, thanks for joining us today.
Glad to be here.
Welcome.
And a little bit about Bob. Your firm's been around for about 28 years. Mm-hmm. And talk a little about what businesses and business owners you specialize in.
Well, we really don't have business owners we specialize in. We specialize in what I call micro to small businesses. I view myself more as a general practitioner. So we don't specialize in any one industry. It could be a variety of industries that we work with. The commonality between our clients is they're all just mom and pop small businesses to maybe we're talking 5 million gross receipts tops.
Okay.
So, but wide range of industry.
And is there any rhyme or reason the number of employees or they have? It just kind of goes with the revenue?
No, it's a mentality.
Yeah.
So our focus is the financial accountability of small business owners. When I started my practice, that was the answer. That's what I was providing. Whenever you start a business, you always want to answer an issue that's in society.
Yep.
What I realized is a lot of micro small business owners just starting up really didn't have a sound understanding of their finances. They're a great plumber. They're a great realtor. They're a great doctor. They're a terrible accountant.
Very common.
and so,
Me too.
But they're doing it themselves. And so I started my practice to answer that question and solve that, to help them not just do the work, but to help them become more knowledgeable about those financial numbers. And so that's what we still do today.
Great. So a little bit what we're talking about is how you help them figure out where they are, how they get better, understand their numbers, and really how you can help them and the business grow. And kind of, the biggest thing I think, when you have that relationship is taking that piece off the business owner so they can do the things that they are really good at.
Yes.
Yeah. Great. So Dan, you want to?
Yeah. So I'm curious, over the last 28 years, what has changed as far as the level of knowledge, I guess, of the clients with the things that are available and the technology and things that you've been able to utilize that's changed the types and maybe amount of service that you can provide those clients?
So I think obviously technology is the big thing that's changed. When I first was way back in eons and dinosaurs are still roaming, we're dealing with paper. A lot of small businesses, they're just writing the checks by hand. They're dealing with, 13 column pads if they were actually doing anything. They weren't using computer systems. And then, thanks to the popularity of the computers, people started computerizing and such. But for the small business owners, a lot of them stayed away from it. They're like, no, I don't want to, I'm happy with this is my warm blanket.
Yeah.
I want to stay with my warm blanket. And so if I look now over the years, just to throw something out there, QuickBooks is the big gorilla on the block for small businesses on it for an accounting software. Almost every small business owner I run into knows about QuickBooks. And they're either using it or they're like, well, should I be using this or not? They have some knowledge about that. And that speaks to they have some knowledge then that, gosh, I should probably be keeping some numbers and doing things to make my life easier and not just throwing everything into a shoebox and giving it to somebody at the end of the year or, clearing off my dashboard and throwing it in the box at the end of the year and hope all my receipts are there. And so that's what I've seen a lot more is that. It also brings complexities because unfortunately when you have the software, and I'll use QuickBooks again as a prime example, I'm just going to pick on them. It puts off this persona that it's fairly easy to use, which it is, but it's only as good as the knowledge of the person that is using it. So if you don't know how to utilize the software properly and have some accounting knowledge, you can really mess it up.
Devil's in the details.
Yes.
Garbage in, garbage out.
And so before they didn't have that. Now I have clients, instead of giving me a shoebox, they'll come and they'll say, oh yeah, we've been doing everything in QuickBooks, and we get that, and it's a disaster. They haven't reconciled bank accounts for 8 years. The computer says one thing, the bank account says another thing, and yeah, it's just a mess. And so then we do a lot of cleanup.
So does that require training, for clients of, okay, here's how you actually use this thing that you're going to utilize? And I don't know if you were training them on filling out paper 20 plus years ago. But now are you having to go in and talk to the client about, okay, here's how to utilize this so that it's not a complete disaster when you actually come to us towards the end of the year, or we're doing mid-year planning or anything like that?
And I would say, we tell a lot of our clients, the first thing we do when we onboard a client is we triage them. We get in there and we get a pulse of what's going on. And if things are a mess, then we're going to train it. Or maybe they're a brand new company. We're going to teach them how to use a system that works for them. Most cases, that's QuickBooks. Could be Xero, could be other software out there. But we'll teach them how to use that. And you mentioned, you want to, let go of your accountant, let somebody else do that so you can focus on your business, which is great. Mm-hmm. There's a problem with that. Costs money.
Yes.
Okay.
And that's where usually the micro and small companies hit the
That's where
button.
It is. Yeah. So we see a life cycle. And we see a life cycle in our business. And when we are business is just starting out, I'm a huge proponent of not outsourcing your accounting. I'd rather have you learn how to do it yourself, because you're building your business, but you're not so busy. You don't have all these clients that your entire day is suddenly taken up by doing client work. Well, maybe you're incredibly blessed and that's the case, but most cases that's not the case.
Yeah.
And so by learning in how to maintain my books, how to do the basics. And, we're not trying to make people accountants, but, understand the basics. By doing that, it's going to do one of two things for you. First of all, your books are going to be up to date if you do it properly. Second of all, you're going to start learning about the financials of your business. You're going to have an understanding of what money you're spending, what money is coming in. Other than a lot of businesses, and I've seen this like in 2008, we saw a flood of businesses come in then. Whenever there's a downturn in the economy, those businesses that have been flying by the seat of their pants, living off of what's in their bank account, and as long as they see money in their bank account, they're happy, suddenly learn they can't do that anymore. That's not sustainable. And so that's when we see people change. And so if you learn at the beginning of that, you're going to know that. You're not going to be living off the seat of your pants. And then obviously after time is when you outsource it. Now it's training how to read the financials, what's that giving you and such. So there's a constant training process.
The P&L.
Businesses.
Yeah.
Pretty much your profit and loss and your balance sheet. Your balance sheet comes into play. A lot of businesses just focus on the P&L.
Right.
But when it comes to lending and things like that, that balance sheet plays a lot.
That's an important piece when you're going out for lending. Absolutely. Yeah.
So as far as the teaming of other professionals, how has that changed over time? Are you spending more time with attorneys? Probably not, but financial advisors. We'd like to think we're heavily involved in, although all that we do mainly for our small business clients is, we talk about how they're going to grow their business, but we also discuss with them how do they leverage it with a retirement type of plan and things like that. But we tend not to get into the weeds of, the accounting side of it at all. Right. Have you seen that change over time, or has it stayed relatively static? No,
I have seen that change. And it's probably the complexities of retirement plans and the different ones that are out there as they've added. Before it was the age old, everybody just got a SEP IRA plan for their business.
Yep.
But now we have this, solo 401k plans. We have the small business 401k plans. So there's Roth components to that.
Yep.
There are things you're doing that it becomes a little bit more complex. I can't just take something off the shelf and plug it in. Our firm, we stick in our lane, and those are things I know, as I tell clients, I know enough to be dangerous about it. And so that's why we partner with amazing firms like yourself. And I've seen that increase over the years. The reality is, to save money on taxes, I got to spend money.
Yep.
There's no secret. And so what we constantly explain to clients is, If you don't have a retirement plan in your business, you're losing out on a deduction where you're spending money, but you're really not spending that money. It is still your money. You've just locked it up.
Yeah.
Yeah.
And by doing so, now I get a tax deduction. And so that's one thing that we try to push with our clients when we find that and understand them. But I'm seeing a lot more clients coming in. Before it was they didn't have anything. There was nothing. Now I'm seeing clients come in. They have something in place, maybe an old SEP or something like that, but they've got something in place. And then it's a matter of evaluating it. You know, maybe the SEP worked out well, or maybe it's a simple IRA and the company wasn't making a lot of money and that worked well. But now you're in a different place.
Yeah.
Yeah.
You need to really visit this. And so that's when partnering with the firms, you know, like VLP, to come in and analyze that and say, here are the options based on your employee base, based on the size of your company that you can put into place.
Yeah.
Interesting.
Yeah. And from our perspective, it's always good because you have the accounting background and the numbers, and we can also walk through. It's really getting to just being a resource in planning. And the laws changed, and the laws keep changing. And when the laws keep changing, it's key to all be talking because Secure Act has changed a lot in the retirement plan space. And so I do think it's becoming a little bit more complicated, even for the small accounts we would have for a client who really didn't maybe need a lot of accounting. The Secure Act has made things a little bit more interesting.
Yes. That's a good word.
Yeah.
Yeah. Good point.
So what do you think some of the, the plumber you mentioned, the other people, they start these, they're like, look, I'm good at this thing that I do, right? I'm a good financial advisor. I'm a good plumber. I'm a good accountant.
Yeah.
But what is it that you see that they regularly make from we call them mistakes, but they don't really think through when they go, okay, I'm going to go start a business doing this. And then the things that sort of that they can improve on or mistakes that you see that are regular types of things, if you know what I mean.
So sometimes it depends on the industry, but since we brought up the plumbers and such like that, that's a prime example. A lot of small businesses in the accounting world that we see is they make the mistake of saying, oh, well, I know how to use Excel. Let me use Excel. And then they just keep lists and they're throwing everything in Excel and things like that, which is great. Kudos. It's better than nothing. Problem is it's not scalable. As your business is growing, if you want to get the metrics to understand what your business is doing, to plan for down the road, you got to either do a lot of work or you're just not getting it. And so I see that a lot. The other piece of advice is just not coming out and getting advice, not getting advice up front. Or the advice they're getting is from their great uncle who was a plumber in the 30s or whatever, I don't know.
Yeah.
And they're giving them the advice to start up, and they really aren't getting the proper advice, okay? When we're looking at a business, especially when we're starting a business, there's accounting, there's investment, financial, there's legal. And you really got to pull those all together to make sure you're creating a structure that's right for you, to not just today, but where do you want to go? Where do you want to take this? And it doesn't mean you have to have all the answers, but you want to get that advice before I step out the door. Now, I caution, I've also run into businesses that spend way too much time getting advice, and they're almost afraid to get out the door.
Paralysis by analysis.
Yes.
Yeah.
And so at some point in time, you just got to realize, hey, you're an entrepreneur, which means some of it, you're just hanging on by a kite string.
Yeah.
And so you got to get out there, but be smart, get some team players. I've always said anybody just starting a business, you need to have a team of professionals. I'll start with myself. You got to have an accountant. You got to have a CPA. You have to have a financial planner. You have to have an attorney. You have to have a banker representative. And then the other one I always look at is an insurance agent, not just somebody who you buy insurance, but a broker, because you want somebody that's going to be able to evaluate the liability side and what can we do to offset that through insurance products. And a broker is going to be able to help that. And so you need those type of people are going to help guide you and set your business up as it moves down the path.
Yeah. Interesting. So do you see a big misunderstanding with those clients about the tax preparation work
Oh, yeah.
as opposed to the tax planning work? And they're like, why do I need to meet with you in May or June? I've already done my taxes. What do you want to meet for? And why do you want to meet more than once?
Yep. We run into that a lot, and I use the terms, and it'd be kind of simple, but I mean it's a case of you want to be proactive as opposed to reactive. And if you're only seeing somebody when a tax return is being prepared, and a preparation of a tax return is just that, it's filling out a document. Yeah. It's filling out a document and filing that document. That's a preparation of a tax return. It's a terrible time to get advice because usually your tax preparer does not have the time to really give the proper advice and really get into it and look at and do analysis and things. They are slammed. And so that's a terrible time to be getting advice. Also, if I'm coming to you in, say, February to look at the previous year and what can I do for planning for the previous year, it's too late. The door's closed.
A lot of it, yep.
We can't change that. Yeah, there's some things, not much. The vast majority of things you can't change.
Yep.
Our firm, we're big proponents of planning. We want to meet with clients after the close of the third quarter. We want to meet with them in October, November window timeframe, solely so we can see, hey, how's that year going? How's your business doing? If their accounting hasn't been great, that gives us an opportunity then to say, okay, what can we do to fix this? Or if they've been doing it themselves, they haven't outsourced it yet, then, are there errors? It gives that opportunity to clean it. But more importantly, it gives us the opportunity to see how have we performed year to date, that P&L that you mentioned.
Yep.
Look at that P&L.
Yep.
And we're hyper-focused to that. And we have a conversation of, well, what things can you take advantage of? What will the law allow? Do you have a retirement plan or not? Is the retirement plan the right plan for you or not? What can we save? What do you have ready where we can contribute to a plan?
Right.
And so we're looking at that then so we can plan for the end of the year because you got time before the year ends to implement change.
That's a great point because some of the plans have to be established before the end of the year.
Right.
Some don't, but if
Right.
you really had a phenomenal change in revenue and you were blessed, you have to have some of those things done in the calendar year to really take advantage of that. So,
and sometimes, and a lot of people think, oh, well, I'll do that the last week of the year. It's too late.
No, that's definitely too late.
Good luck getting somebody to set up a retirement plan.
Most companies have a hard cutoff at December 1st. I mean, if you need a bigger company,
or
it's
November.
Yeah, it's hard.
And so, we run into that a lot.
Yep, absolutely. That's a great point. So great. So we talked a little about, you talked about little kind of the year-round processing, and what are some of the common mistakes that you see business owners and maybe they can avoid by doing this tax planning versus the tax paying you to do tax preparation? Because I think that's a big thing. Clients get paralyzed by this the advice paying, right? They understand they have to file a tax return. Yep. Everybody has to do it. Business have to do it. You can go to jail if you don't, and those types of things. But a lot of times, especially being a micro or small business owner, this is a cost. But a lot of times what we find, working with small business owners and the CPAs, just like you, is that the advice, yes, it costs something, but the value, because of the mistakes they can avoid, and some of the things they can take advantage of really outweigh it. Speak to that.
There's a couple of things that come into play here. One is, is some elections, tax elections and things like that. Can we take advantage of elections or not? Some of those decisions got to be made before the end of the year. Okay. Prime example, if I'm an LLC and I'm filing as a sole proprietor, been doing that for years, well, you have the opportunity where you could be, taxed as an S corporation, and we can do that. But you got to do that within a certain time frame. Now we can, in theory, do it by March 15th. But if I've been in business for 5 years or so, I can't do it by March 15th. I got to do it, I got to do it the year that I want that effective. I got to file that paperwork. to be in there to roll that clock back to the beginning of January. Then there's implications. I got to have payroll. So I got to have time then to set up payroll and get payroll reported and things like that. And well, if the year's closed, I can't do that, or I'm going to be paying penalties, and we don't want to be doing that. And so that causes the issue. The biggest issue I see, and this is the reason why I'm a huge believer, I want to reduce taxes as much as we're allowed by law. But a lot of small business owners, I think the big misnomer out there is that, you know, people think, oh, you own your own business, that means you're independently wealthy. That's the truth. You're not.
Yeah.
And so a lot of, you know, business owners, when they have cash, they're thinking about expansion, they're thinking about this, and they want to grow. And so they're using that cash to build and grow their business. The problem is, if they're not aware of where they are financially, they can tend to spend that money. Then when it comes to tax time, they don't have the money to pay their taxes.
Yep.
They're sort of shocked that they're like, wait a minute. And this goes back to why I started my firm, because I remember sitting down with this client, doing all their financials, doing their tax returns, sitting down with them in March and saying, okay, here's your tax return. This is what you owe to the IRS. And I go, well, wait a minute. I don't have any money in my bank account. How can I owe money to the IRS? And I'm like, well, let's walk through it. There's things that you did. You paid off debt, which is great, but that used cash. Didn't give you a tax deduction, but it used cash and things. And so by planning ahead of time, you get an idea of what your liability is. You know that cash flow that you need to have set aside to pay the piper when they come knocking. And so that's a big thing that I see with non-planning. And the other one is it's just that availability to deductions. Yeah.
One other thing, talk to this one, and I think you hit it, you mentioned it earlier, and I think is really important when you're a small micro business, is if you want to grow and you want access to credit, how important is the P&L and the balance sheet? And if you don't have one and you don't show a profit, what are the chances of getting credit?
None.
Exactly.
None. And even if your numbers are good,
yep.
Let's just say your numbers are good, but it takes you a month and a half to get information to your banker.
Yep.
They are automatically making a judgment call on what type of business you are. Are you a worthy risk? There's one thing to say, yeah, okay, you know, the credit rating is halfway decent and things like that, but they're disorganized. Do I want to give a disorganized individual? Because a disorganized individual, you drop something in there, it could poof, blow it up. Whereas somebody that's got their act together and everything like that, if they hit a bump, they're more, yeah, something's going to happen, but they can come in and ride that out.
Yeah.
And so when a banker sees somebody that is a little disorganized, then that's a problem. So we see that. Yes, it definitely impacts that. And if we don't have good financial numbers, if we're not watching those numbers and flying by the seat of our pants, yeah, forget about getting a loan or anything.
Yeah. You
know, it's crazy, you know, so.
And for those who are watching who go, well, what would they need credit for? You know, I know companies will get lines of credit for emergency purposes for, hey, cash flow didn't work out so well, so we got to make sure we make payroll.
Yep.
Even if it's just one owner, they got to pay themselves, or hopefully they want to pay themselves. What other things are you seeing these small and micro businesses using these, you know, loans and lines of credit for?
Well, a lot of it is just how you just put it. The issue is most small business owners will go to borrow money when they need it. And this may sound odd, but that's the worst time to borrow money.
Yep.
Because you probably are not going to get it, or you're not going to get what you need. Because look at it again. We just talked about, we need to have strong financial statements. We need to be showing profits and things like that. If you're waiting until you're in the hole to say, gosh, you know, I've used up all my personal cash and my personal reserves, I need to go find some resources so I can cover payroll or something. They're probably not going to get it. So we want to borrow money before we actually need the money. And a lot of people say, like, well, but I don't want to owe money to the bank. A line of credit's a perfect example. Yeah. You're not actually borrowing the money. You are getting a letter of credit that says you can borrow up to X amount of money when you need it. And you don't have to apply because you've already done this. And so they give that to you. And That's a smart thing for business owners to have up front. And see that a lot for covering, payroll, government contractors, prime example. They got a customer there that is a lot of times paying 60, 90 days down the road.
Yeah.
I got to cover expenses today. My employees are not going to wait 60 to 90 days for their paycheck. So line of credit is going to come into play on that. If I am a retail outlet and I'm covering inventory, maybe I'm, sell a lot during the holiday season, I got to beef up on inventory, but I'm not going to get my payment for my sales until the tail end when, merchant.
Yeah.
I need to fund that.
Yeah.
Line of credit's a perfect ways to do that, but I got to have strong financials. I have to have a good accounting system to support that. Yeah. And without it, it falls out.
And that's great. I mean, that's really where the planning comes in and having those discussions, because you do want to have that in place. I think of, just markets, let's think of COVID, right?
Yep.
Nobody was prepared for, a lot of companies had to shut down, things came to a halt. You couldn't go to the bank and get a line of credit at that point. Now the government gave a different program, but you still had to wait to apply. So I think that's just huge. And
you had to have numbers. You still had to have your numbers in order. And if your numbers weren't in order, you weren't getting it.
Yeah. Yeah. Well, that's been great. Your discussion on small businesses and the micro businesses that you work with, extremely valuable, and I've learned a lot. Dan, you too? Yeah.
I learn something every time.
Every time. But before we close up, let's shift gears a little bit and talk about what are some of the major changes you see, some of the credits and deductions. As we talked a little bit about legislative changes, some that you've been talking to clients with this past year.
So this past year, tax legislation over the past year really for businesses has not been a lot, especially with the micro businesses, hasn't been there. Obviously, there's legislation. You hear businesses, micro businesses hear about the ERC and all that kind of stuff. That's a whole nother podcast.
Yeah.
Okay.
We'll bring that one back.
So that one's a whole nother story. The big thing that we're looking at and we're advising clients on, one is looking at the qualified business to tax deduction. That's a deduction that small businesses get, and just, bare bones basic. Basically, if I'm a small business and I have a profit and I meet certain checkpoints, I only pay tax on 80% of my profit. I get a 20% deduction, which is great.
Yep.
It's this came in play in 2017, which is fabulous. The problem is it had a deadline. That deadline ends 12/31/2025. And so this is something that the legislature is going to be looking at over the next, this year and next year to see, do we continue that? Do we not continue that? That's a big player for businesses, because suddenly, if they don't, you're going to see your taxes, boom, jump up. You need to be aware of that and be on top of that. Other ones, there are still, credits out there for employees. You have to hire certain employees. We don't have that here. That we don't do a lot of talking about that kind of stuff. I think the only other real big thing that's out there right now, and it's not a tax provision that are affecting businesses, and that's the beneficial owner reporting. So right now, starting in this year, the Department of Treasury, not the IRS, Department of Treasury, requires businesses to register with them as to who their owners are, or their quote unquote beneficial owners, which gets kind of complicated, which is reporting. So this is going to be anybody that's incorporated with the state. So an LLC, C Corp, if you've been an S Corp, then it's an S Corp. But if I've registered with my state corporation commission, this affects you. If I'm not incorporated, I'm just, Mary Kay representative, I'm not incorporated, self-employed, that's not you. But if I've incorporated with the state, this covers you. There's going to be hefty penalties if you do not do this. The filing requirement started effective January 1 of this year, brand new. We have to file by January 1 of 2025. But if I'm a new business starting up, you got, I think, 30 days to file this. This is something the accountants really aren't doing, because it's more of a legal thing. It's more of a registry thing. But there's a lot of unknown out there, a lot of predatory emails coming out about it. And so we're recommending our clients, hey, talk to your attorney about this.
Got it.
You want to be aware of this. Don't panic, but be aware of it.
Yeah. Great advice. So Bob, great having you today.
Thank
I
you.
think it's, again, a testament to what you do. And we are grateful to have you working with a good bunch of our clients, and great useful information. I think everybody pick something and learn from there. And, for clients, if this is something that hits home, or you thought, well, gee, I thought I knew all the things I needed to know about my business or starting a business, or you just want to have some opportunities, we feel free to reach out. We can give you Bob's information if it's a tax question, if it's a retirement plan question, those types of things in investment, we can certainly help. But again, great. Thanks for having you on. And one thing I think I would say in closing, Dan, is we always think it's good to have a team, right?
Yeah. Team of professionals, especially if it's a business owner, you don't know what you don't know.
Exactly.
Right.
Yeah.
You know how to do the thing that it is you do, but all the other things, you can Google anything you want, but you don't necessarily know the question to Google, right? And so those professionals give you, hey, have you thought about this, and then you go, oh, your mind's racing. I just want to go out and get clients or customers or whatever it is that they
do what you're really good at.
Yeah.
And that's what you really should be doing. That's what's going to grow your business. And
So find a team of people that you trust, and who are being proactive with you to, hey, you got to get this done. You need to get this done. Keep doing the things you like to do.
Yeah.
Do that all day, because that's what brings in the revenue. But spend a reasonable amount of time of working in it, which is most of your time, and working on it. And
that's key. I think the working on it is, I think so many businesses forget about.
Yeah.
Yep.
So
we get so focused on the day to day, and before we know it, it's December or January, and they're calling you with going, I didn't do anything this year.
Yeah.
Well, I can't help you.
Yeah.
So. All right. Well, great. If you like this episode or interested in anything we did in the past, please visit our website at vlpfa.com and our social media. Like us and check us out there. And we look forward to having you join us next time.
Thank you.
Thank you.
Thank you for listening to this episode of the Live Great Review. If you like what you heard, please subscribe to our podcast on iTunes or Spotify and recommend our podcast to family and friends. To learn more about VLP Financial Advisors, please check out our website at vlpfa.com. Thanks again.
And now for our necessary disclosures. Securities and advisor services offered through Cetera Advisor Networks, LLC, member FINRA SIPC, a broker-dealer and registered investment advisor. All investing involves risk, including the possible loss of principal. There is no assurance that any investment strategy will be successful. The views stated in this podcast are not necessarily the opinion of Cetera Advisor Networks, LLC, and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned. Due to the volatility with the markets mentioned, opinions are subject to change without notice. Information is based on sources believed to be reliable. However, their accuracy or completeness cannot be guaranteed. Past performance does not guarantee future results.